Hello and welcome to this Monday, May 27th edition of your Fab Five. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and it's a pleasure to be with you. I'm going to go ahead and get started with a chart that I think looks like there's certainly a lot of risk in it, but I think there's also a lot of potential reward. So just understand that. But the first stock I want to show you is Magnite. This is MGNI. Stock had been consolidating, been going sideways really for the past 10 months after gapping down on big volume back in August of 2023. It had worked its way all the way back up at the end of February to that gap resistance level, failed, couldn't get through, pulled back again, came out with earnings right here. Earnings beat. I think the earnings were around 130 million revenues in the latest quarter, maybe 132 million, better than the expected 123 million. Earnings came in with a gain of 2 cents. We had a 2-cent profit, or actually, no, I think it was a 5-cent profit. The loss expected was 2 cents. So it was a beat of 7 cents. So really nice top and bottom line beat on Magnite. You can see the gap up. Then we went back, we filled the gap. We started to turn back to the upside. Volume began to pick up. And then there was an announcement that Netflix was no longer going to be using Microsoft for its advertising platform. And instead, they were looking to utilize both Magnite and Trade Desk, TTD. And as a result of that announcement, you can see Magnite jumped up intraday, went above that gap resistance level, but by the close came back down, pulled back to the gap support area. And then last week, especially on Friday, went back up and we finally got that close above gap resistance. We did so with volume picking back up again. And look at the relative strength of Magnite versus its software peers after taking that tumble back in August of 2023, worked our way all the way back up. We had a double top and just broke it on Friday. Again, heavy volume, breaking above a key price level, and also breaking above a key relative price level. So all of that combined suggests to me that we could see MGNI making significant move to the upside. It is volatile. There's no guarantees. We don't go back and fill a gap, maybe hit that rising 20-day moving average in the short term. That's where some of that risk comes in. But I believe further out, we're going to go higher on MGNI. So that was stock number one for me today. Stock number two, eBay. So eBay, if we look back over the last 6 months, you can see we saw a pretty nice gain from mid-February through about mid-March. And since then, for about 2.5 months, we've been sideways consolidating, unable to get through that $53 level. And it wasn't until Friday when we made that breakout, volume picking up. Look at the relative strength, eBay relative to the specialized consumer services area of the market, breaking to a new relative high. So again, price breakout, increasing volume, absolute huge move as far as I'm concerned in terms of relative strength. That all combined leads me to believe that eBay is likely heading higher. To the downside, a pullback just below $53, maybe even down to the 20-day moving average near 52 is possible near term. But I believe that the next significant move is going to be the upside on eBay. Number three, LivaNova. This is a stock that I've talked about with our Earnings Beats members quite a bit. I really loved the breakout with earnings here. You can see that huge gap up. Look at the volume picking up. The next 2 days, volume was coming down, but still pretty heavy. And we continued pushing forward, got up to about the $64 level. And we have now seen consolidation for probably the last 3 weeks or so. And with that consolidation, we have seen a test of key gap support and also that intraday low that we saw the day of earnings, which was down around the 58.50 area, something like that. Anyhow, that level was tested on Friday. We did reverse and put in a little bit of a hammer after testing that lower support area. I would expect LIVN to move higher from this level here. There's an outside chance that we do break that 58.50 area and go down and fill the gap down to 55.90 or whatever the prior close was before earnings right in here. So that 55.90 is a possibility, but I believe the next move on this stock is going to be back to the upside, back to 64 and possibly through it. So LIVN, I think, looks good. If you look again, the pullback has been on much lighter volume than we saw on the breakout, and the relative strength, LIVN relative to its medical supplies peers, I believe is continuing to be on the move. It's not unusual to see relative weakness come in during consolidation, because if the overall group is just simply going sideways, you're going to have relative weakness. The key here is that you don't want to see this relative weakness go all the way back down to these prior lows. We're still well above that. We're at a key support level. I'm expecting we're going to see a bounce here. Fourth stock. This is Enphase Energy. Been talking about this one a lot with members, especially. I like this breakout here above the 123 level. Renewable energy itself has begun to improve a little bit. And I would say maybe of all these stocks I'm talking about, Enphase might have the highest risk of all, just simply because it's such a quick mover in both directions. So it's not going to be for some of you who maybe are a little bit more risk averse. This is a stock that easily, we close at 125 on Friday. Next week, it could be 110. So you've got to be prepared for that as well, potentially to the downside. Do you have that kind of a stomach to hold out for a while for a move back to the upside? Now with the breakout, that additional upside could be as early as Tuesday when the market opens. That was a nice breakout. It was the first time in about 2.5 months that we were able to clear about the 123, 123.5 level on an open or a closing basis. So we did have that breakout. Volume the last few days on this move up from about 111 has been very strong. And look at the relative strength, just barely getting a relative breakout. If we look back over these past few months, just barely getting a relative breakout versus the S&P 500. I don't use the ENPH relative to the renewable energy group, because the renewable energy group, the DWCREE, is essentially First Solar. And First Solar was up 40% last week. So any renewable energy stock is going to look really bad against that. But if we compare it to the S&P 500, you can see that this is a stock that's beginning to show some strength. When it moves, a lot of times relative to the S&P, and absolutely you can see some huge moves. This was from 95 to 135 in 5 trading days. So in 1 week, basically it was 50% of its move. And like I said, First Solar was up 40% last week. These renewable energy stocks can really move to the upside. So I like the breakout. Just understand, if it fails, moves back down, it could be a pullback to that 110, 111 area pretty quickly. And then finally, the fifth stock I wanted to mention was Toast Inc., TOST. Probably after the last week, maybe 5, 6, 7 trading days, maybe some people think Toast is toast. I don't. I think this is a pullback to a really nice level. This is when earnings came out on Toast. Heavy volume, stock traded over 25 million shares the day of earnings. Gapped up, cleared this prior consolidation area, opened at about 25, a little over 25, ran up to 27 that day on very, very heavy volume. Continued to push higher, but it looks like it was a little bit of an effort to get it to go up any further. Then rolled back over, and on the move back to the downside, you can see volume less than 10 million shares on each of those days, which is much, much less than what we saw on the way up. So I think TOST on this pullback with nice relative strength versus its computer services group, I think all of this adds up to a potential move to the upside. I did put one other support level in here on Toast, and that was at the bottom of gap support. If we fail to hold the 25 level, maybe we're looking at 23.75 to 24. But from there, I would absolutely expect a reversal back to the upside. So I like it where it currently trades as an entry, but I'm just saying there's a chance that we go back a little bit lower, maybe 4 or 5%. To catch that bottom of gap support. But from there, or even from the top of gap support, I think the next big move is back to the upside. I'd look for 28 initially. A breakout above 28 would be very bullish. All right. I do want to mention that we have a Earnings Beats Digest free newsletter. So if you want to, go over to earningsbeats.com, scroll down, look for this entry form right here. All it takes is a name, email address, and hit that subscribe button. This week, I'm going to be focusing. It'll be out Monday, Wednesday, and Friday, and I'm going to be focusing on individual stock trades and setups that look really interesting to me. So if you're looking for some potential trade ideas, looking for education, you come to the right place. The EB Digest is certainly one of those things that we provide free of charge, no credit card required. You can unsubscribe at any time. It's simply done to help our entire Earnings Beats community learn more about the market, hopefully help you try to make more money trading. So I think you'll get a lot out of it. Make sure you scroll down at earningsbeats.com, fill that out, name and email address. Also, please like this video and subscribe to the channel. It really helps us in terms of trying to build our YouTube community. We'd really appreciate that. And if you want to take that next step with us at Earnings Beats, we are currently running our spring special. You can click on that best deal of the year. It is absolutely our best price deal of the entire year. You can save a lot of money right now. Make sure you check that out as well. Have a great day, everybody. Happy trading.